Hey, what's going on, everybody? This is Jeremy back with another video. This video is I'll try to keep it short. I know I get winded and start running my choppers, start running my mouth, and then it's long and long and long and long. But hopefully, you get some enjoyment out of it. Some technical analysis you could take from it. Maybe not. I've been kind of plugging away. There's some videos that I've actually recorded. I think I'm going to actually just try to go in, fine tune, and give you guys a little bit of variety. Again, just trying to give a little bit of a different perspective on the markets outside of just doing standard markups. But I felt like since this Friday is actually going to be considered like the NFP week for the markets, and Powell spoke, I just kind of wanted to give you my perspective and outlook on a couple of markets. Also, I think now because this is the middle of the week and there's not a significant high impact news before Friday, especially for domestic U.S. markets. It might be a good time for me to go back into that one pair, that one market that would be equivalent to Euro USD in terms of a spread. Okay, so without further ado, let's go ahead and jump in. I've got German 30 that's up here. This, interestingly and weirdly enough, I know this is on a 3 minute, but I hadn't, excuse me, drinking some carbonated stuff here. I got up early, like super early this morning. And by the way, by early, today is Wednesday, March the 8th. So probably about 5:30, 5:45 this morning. Got up, was kind of going through, looking at some markets. And then just before went out for work, I started looking at German 30 on a higher time frame. I believe it was on or about like a weekly, maybe, just to see what the delivery was. A few weeks back, or well, no, it's not a few weeks. It's been longer than that. But essentially, I caught a really good long position back up, and then I kind of just got out, realizing that the context was correct, because I still feel like German 30 had been bullish, but then there were some ranges within the bullish context that allowed for the potential of some shorts. So this was one of those trade ideas, but this actually didn't start and finish on a 3 minute. I actually came all the way down from the weekly essentially, and I ended up at the three. And as you can see, this is an entire zone that's been marked out. This is essentially an entire supply zone by itself, where I don't even have, like, I'll just pinch this all the way down. You still can't see it, but here you'll see I have my target that's all the way down here. I'm literally looking at just the mitigation of a supply zone by itself without the true potential delivery here. And yes, I know you see this number. Don't be alarmed by that number. It's a paper trade account. Okay. As I've said before, like a lot of times, you should trade, your trading plan should reflect regardless of the account. But I like to just kind of forward and back test a lot of times some processes. So without really getting into the technicals, which will drag this video along a lot longer than kind of what you would want. General context is quite simple. Again, this is a supply zone looking to deliver short. This is the area under which there was a short that was taken from the previous range. This was the low. I basically targeted where price had broken below, and it looked like there was a strong buy before sell. And then I just basically scaled down, did the same thing here for this specific area. I will zoom in here so you can see it. Let me just lock this so nothing slides, and I can continue to zoom in so get you a better look. I know my eyes are just like hella good. I'm hella old, but the eyes are still fairly flip and decent. So again, last really good long or buy before the sell. This was the break of that area. You could push this, pull this all the way across. I literally just took the 50, set basically a limit, as you can see, right on this level. And again, there's nothing that says just because it taps and it's running away that it's going to run to my TP immediately. It could, mitigate, come back up here, take me out, and then it can run, which is not uncommon. I've said that to you guys in previous videos. I've had where it's done exactly what it's doing right now. Come show some displacement short, but again, understanding not even the intermediary, because I'm on a 3-minute, this could be intermediary if you're going all the way down to the seconds, but just looking at the overall structural delivery, what do you see here? Is it not a bullish? Yeah, but maybe it's a bullish retracement. There's a lot of correction in here, a little bit of motive, correction, it's a little bit of motive. So I say again, just looking at the range, and is this a range that wants to hold or fail? Time will tell. So for right now, profitable, price is pushing back long. So we'll see if there's further mitigation or a potential absorption up here before the run short. So that's that. Now, let's kind of move from that, and then let's get into the idea and the concept of what is to come for this upcoming week. So Friday, as we well know, is going to be NFP day. This is one of the things that, or one of the markets, don't want to use this one. I was doing a test in that market. I think I have, yeah, I've got this one marked up too. So like, as you notice, like I will go through, and a lot of times it's ideas and context. Okay, we can use this one. I don't mind. So this is my Owanda markup on EU, right? And this is what I'm looking at. So I went to a daily so you can kind of get an understanding of what I believe and what I think the context, the overall context is. Okay. Now, I know you see this box. This is not based obviously on the daily. This is more or less going to be based on probably a 5-minute, if I had to guess, in terms of just being able to look in and zoom. If I zoomed in here, even from the daily, I can tell you that essentially this range is coming from this low. Okay. But if you look at the overall move, you can spot the swing highs and the swing lows, right? You can see them. And this low being put in place. Again, this range didn't hold, it broke above. This range didn't hold, it broke above. It mitigated here, and then it's run short. There are a couple of accounts I will say right now I'm actually holding a long, because the inside structure, or the quote unquote fluff, the context is great enough, in my opinion, that I can take a calculated risk management position into longs for a very, very short period of time. Because what I would be maybe anticipating, this is kind of like a generic bit of a forecast for you. Okay. A lot of people are going to be looking at NFP this week and going, okay, short. And you would be right, because the market is showing still, even after all this time, and then you can look at the dates, and you can look at the years back here, since about the end of 2020, the market's been delivering short. There was a test of the supply here in May of 2021. But ever since that, we've been short. Since May of 2021. We're now into March of 2023. So market's been short. It's put in this low. There is some bullish mitigation or bullish retracement, whatever you want to call it. Okay, back into a given area. Now, if you notice, I have this massive unique fib, which if you've followed or watched any of my videos up to this point, you realize that I only use the 50% just to kind of give myself an idea and reducing an overall area to maybe a defined range, right? From the 50 to whatever, but 50% of whatever the range is instead of the entire range. So in my mind, and it does, and what biases and what my order flow delivery idea, trade idea looks like may very well not play out. However, one of the things that I would look at technically, from a technical delivery standpoint, the bias is yes, it is still short. However, if I'm looking at, again, ranges, I'm looking at this range, and in my mind, I'm saying, okay, we've seen this story about 1,000,000 times, right? Here's a clear break, there's a breakdown, here's the immediate retest, and it runs away. It puts in this low, it comes right back up over, a period of time, because again, we're still on the daily, comes back up, and then starts to deliver and break low again. But see, here's one of the things that I tend to think about, and why my bias may be a little different from everyone else, because again, I'm still stuck in my bias of context. Okay, what do I mean by the bias of context? In this given situation within the EU market, I'm still going to be looking for some type of delivery long, or some mitigation. I don't want to say delivery. I'm still going to be looking for a longer mitigation, because just from an overall institutional structure standpoint, there is no defined or no specific reason for price to get back up here. Like zero. Okay. Institutional order flow says the market's short. The market's been short for 3 years, damn near. Okay. 2.5, 3 years. 2.5, 3 years, you've been short. Why would you be long? Well, not so much long, but you've got orders to close still. You got orders up here to close. Does it mean that you have to come up, this week NFP and close them? Absolutely not. However, let's zoom in here. Let's examine this a little bit closer. And again, I'll try to be quick and brief, and I will show you why my logic is as it is. Okay, my bias and biases, whatever you want to call them, are what they are. Again, not financial advice. Don't sue me. This is just my idea. Okay. I'm going to mark out this area. And again, we're on the daily. I'm not going to use my fib. I'm just going to actually use a box. The box. You opened it. We came. Sorry, having a Hellraiser moment. Forgive me. I just want to change the color of this. There we go. There we go. Okay. So, and then I'm just pulling this across so you can see it. All right. Let's just make that even. That might be better to the eye. All right. So here's what I'm looking at. If I'm looking at more immediate, because all of this back here can get confusing as hell for a lot of people. A lot. Up until, and I'm going to be honest, up until maybe about 2 years ago, this shit was confusing as hell to me. I didn't know whether or not I was going down, I was going back up, I was going fucking sideways, we were going in circles. Didn't have a clue. No clue. What a wonderful thing, and what a wonderful way of spending the last 2 years, just kind of getting this shit straight in my mind. But I digress. Let's continue, shall we? Okay, so what I see here is obviously a bullish retracement, right? Or mitigation, whatever you want to call it, okay? And what I also see is basically a high that comes back and sells off. So it's almost as if price just said, hey, composite operators, whomever came in and said, okay, let's just kind of take this position, and then all we want to do is mitigate really quickly to reaccumulate, to distribute, to reaccumulate. Or in other words, we want to take this strong hand to a weak, to a strong, to a really hard push into a weak hand to deliver a strong hand. which ultimately reflects in if you want to come back here to this low, or you can do what I did, which is to target this high, right, to this low, and this break above creates a market break. Okay? This creates the market break. This is technically going to be the high right here. This 110, 355. That's the high. Now, you would say, well, Jeremy, wait a minute. Didn't you just say the market short, been short 2.5? Yes, I did. I did. And now this is where, when I said I'm in a couple of different positions that are long, that the context makes sense for me short term. So this is not a long-term play. I realize I'm on the daily, and you could say, well, it's kind of conflict. However, just stay with me. Bear with me. Bear with me. Okay? Remember, some of what I'm going to describe, I do not have any foreknowledge. I've just been mindful. I watch price, and again, this is just my idea. I could be way wrong, which is perfectly fine, and I could be way right, which is also perfectly fine. But this is what I'm looking at. I'm looking at this market break, or this break of structure long in an overall short market, which does not say to me, which a lot of people would say, oh, well, that means that the market is bullish. I'm looking at it. You could use whatever term you want. I'm looking at it to say, well, the market will be long for maybe a deeper mitigation. The market's going to be long to maybe take this out to continue short. But as we've discussed, we've talked about, I've described on the videos on this channel and talked to you guys about before, sometimes when you're looking for a larger move, or when the composite operators are looking to move price very hard or strictly in one given direction, or in opposition to the present or current direction, there has to be a catalyst. And the catalyst is coming up on Friday. So I would be looking at potentially everybody and their grandmother looking at this market is going to say short, 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 short. Anybody that knows what they're looking at, they're going to be saying it's short. There are some people, such as myself, that are going to be also saying, yes, clearly the market is short. However, there are going to be times during a week prior to heavy high impact news that are going to reflect the opposite. And the opposite very simply means you've got to gather or garner some interterm liquidity to be able to make this short move. You're not going to be able to continue the flippy dippy, hoppy choppy into extreme delivery to meet this level. So I'm not saying that price is going to get to 94, 346 on Friday. What I am saying is there's a higher probability that this high gets taken out this week. This high at 110 potentially gets taken out, or let's zoom back in here a second. Or maybe it's not that drastic. Go away, First Leap. Maybe it's not as drastic as this, but if this is the market break long, what do we have in here right now? You've got a mitigation of this last sell to buy. All of this now, mitigation. But again, I direct your attention back to, we're on a daily chart. Daily. So what this shows me is that there's been a willingness to come up and mitigate, and not just come up and mitigate and not fall off the face of the earth, but a willingness to mitigate an open of a supply, to push, to mitigate in here, to continue to sell. And now I'm looking at a buy to a sell, another buy to a sell, another buy to a harder sell. And this candle right here, let me grab my elliptical tool real quick. This candle here, and I'm going to zoom in, and we're going to talk about this for a minute. And I hope I don't lose anybody. I would tell you just to trust what I'm going to tell you. You may, you may not. Your own personal choice. Okay. So here's this market break long. Okay. This is the mitigation back into this entire market break or this market area. This elliptical, and we're looking at this bearish candle, this one right here. I want you to notice that when price came down, it came back into this zone, right? This candle closed, this bullish candle opened, and it immediately came and took out this low, which told me, or a lot of people, and I didn't, and I'm going to preface my remarks by saying I didn't take any position on EU before last night in Asian session, okay? Last night, Asian session. There was a reason for that. We're getting to that. I promise we're getting to that. But again, this bullish open mitigated, liquidated, absorbed the previous bearish candle. Okay? It absorbed and liquidated, and it closed, it closed within this range. Okay? The next day, candle opened, continued to push, and what it ultimately did was it did the same thing on this side. It cleared above, okay, which means it cleared the liquidity, it absorbed, it pushed back, and it closed back inside this body. Okay, so two things are true here. There's a liquidation here, basically a gathering of liquidity, okay, which is going to allow you to do what? Drive price in a given direction. I'm not going to say it's going to drive it bullish or bearish. It doesn't matter. It doesn't matter. It's the collection and the accumulation of liquidity, which is going to allow you to push the market in whatever direction by the composite operators. Okay, so this candle closed back inside. And then you got another bullish candle that does what? Clears the liquidity here, breaks above, right? Closes. And then you have this candle that opens, little mitigation, pushes down, and this one actually closes inside this body. So for me, the only thing I'm looking at this point, and you can follow this across, okay? We'll finish this. We'll finish the thought, and what I'm getting to is you've got this low that's been set, okay, on this bullish candle. That's the new low, right? Break above. This is technically a break of structure, okay? If you're just looking at the candles, you can look at these two candles as something like this back here, okay? That's the way you should see it. This bearish candle with the wick at the top, this bullish candle that breaks, basically engulfs this body. So some people would look at this and say, oh, well, that's an engulfing. Okay, great. Whatever you want to call it. I'm looking at the candle in terms of volume. I'm looking at where the liquidity was taken, when the absorption took place. Okay, so you could look at these two candles, and this is essentially what you get from that. The weak to strong. The weak to strong. So once this wick is created, that's your low. Okay? That's going to be your liquidity low. That's an inter-term or whatever you want to call it. That's a liquidity low. That's your protected low. This next candle opens and it mitigates. Okay? But then it pushes away. This is the next. This is a low. This is a higher low. Next candle opens, mitigates the bottom. That's a higher low. It pushes in. What does this one do? This one immediately just reaches back, mitigates, and pushes high. That's another higher low. And then something wonderful happens. The next candle opens, and it's a bearish candle, and it barely just clears the previous bullish. So to me, I'm saying you're absorbing that high, you're grabbing the liquidity above, okay, and you're running the liquidity here. So I cannot, for prior mentorship information reveal what this is called, okay? Because it was not my concept. It was a concept that I learned. It was a concept that I studied. So I cannot, for sake of the integrity of the mentorship that I was a part of, give what this is over, what all of this is called. I cannot use that term, okay? However, what I will say is this: all of these lows were protected lows until they were breached by an absorption, okay? Or the liquidity was just grabbed and price went in the opposite direction. So in this case, this bearish candle absorbs and liquidates this low, it liquidates this low, it liquidates this low. It basically cleared out a week's worth. 1, 2, 3, 4, 5. So yeah, a working week's worth of liquidity. It cleared 5 days of lows, okay? And then yesterday, because I told you last night was when I actually took a position, okay? When I saw the liquidity was taken, right? Now it's completely absorbed the entire previous week of liquidity. I could have said, oh, well, guess what? Guess what's happening now? I know what's happening now. It's going to continue to run short. I didn't think that way. I thought, well, wait a minute. Let's look back left here real quick before we get ahead of ourselves. If I look back left, we're still in a market break scenario. We still had a market break long. There's still a high up here, okay? Institutionally, I'm going to pan back out just a little bit. From an institutional perspective, yeah, we're kind of still in that too. We're still in that. Notice how I went here, because that's basically the high, this low, that high. So in terms of an institutional play or institutional delivery, yeah, we're still in an institutional delivery long. So I'm still in here. So zoom back in and we'll go back to the elliptical. So when I see this clear an entire week's worth of liquidity, I'm not looking at it going short. I'm looking at the fact that, okay, you're probably going to continue some additional bullish mitigation. Price is going to continue this way. And now I have to think about where we are in a week. I have to think about what this week is. And like I said, it's just it's my own bias. So my bias is saying very simply to me a couple of different things. It depends on what the data is, but NFP this week, a lot of people again are going to say, oh, the dollar, it's gonna, EU is going down. It's been long, or excuse me, it's been short, 2.5 years. It's going to continue short. But again, that great of a move cannot necessarily come from nowhere. You're going to have to gather as much liquidity to make that move as you can. And what better way to gather enough short momentum than to buy into it? Because that's what this liquidity grab or absorption or liquidation of all of these lows, that's what that does. It gives you the ability to take the price long to go back short. I hope that makes sense to you. Again, it's a weak to strong hand maneuver. It is a weak to strong hand maneuver. If the market is short, overall, the trend is short. Anything against that strength is going to be considered a weak hand move. So when you have these daily long structures that are still a part overall of a short trend, this is still going to be a weak to strong hand move. So as we approach Friday and NFP, I quite personally am still looking, obviously, long term for price up here, potentially. I don't know. As I said earlier, may or may not make it up there. But I'm looking for this area, this market break area of importance to potentially hold, especially with this liquidation, this absorption. And I'm actually looking for price not to clear this inefficient delivery of price, which it could. It could mitigate back up to, what is that, 106.23.6. So it could come back up here. But I'm not stopping here. I'm looking at the high. And again, that's a little bit of an extreme, but sometimes, as I said earlier, the catalyst in garnering and gathering liquidity, sometimes it takes something. So high economic news or high impact news on Friday, which shows in some respects maybe the dollar not as strong, or the forecasting for non-farm payroll not being as strong, will force the decline of the dollar, if only for the sake of accumulating more liquidity before continuing short. I want you to think about that, because Powell just basically hinted around a couple of concepts and ideas the other day, and look at what you have here. Look at what you have right here. You've got this massive bearish candle from nothing more than a statement. That's all that was a state. He didn't say really anything. You got all of this from a statement. To do what? To create liquidity long. So, in short and in summary, Friday I'm actually looking for some bullish price action out of Euro USD, not a short. While we're here, let's look at one more market. So you see the spread on Euro USD is a 1.8, right? Let's look at one more market I could show you. That's also in Owanda. You see the spread? What does that say? Oh, it's even better. A 0.9, 1.1, and Euro USD was a 1.8. So Singaporean dollar, Swiss franc, doesn't look too bad, does it? Consider looking at it, study it. I'm not going to really go too deep into it with you. What I did want to do, though, obviously, is show you what the spread was. It moves, and as you can see, this is also obviously the daily. It does move a little bit more sideways here as of recent. If you look back 2020, there were obviously a lot of markets moved 2020 for the obvious. But I'll just simply say it's a market that you could look at, get an idea from. Let's go out to the monthly real quick. And as you can see, I already have my bias built into, what I think, what I believe here. It's kind of spelled out on the screen. You kind of know what I'm looking at, where I'm looking, just based upon the supposition of where price was coming from, where it delivered to, and then everything in here, even on a monthly looking at it, is interterm. But again, time frames not for the sake of time frames more or less for the delivery of price and what price is doing, where it's mitigating, and where it's likely to be headed to, as opposed to where it's coming from. So again, I would just tell you, and you see how it pops up to 1.2, still less than the Euro USD. And, again, I know it's not going to be considered as one of the majors, but if you're just getting into trading, you're looking for something that's going to have a smaller spread, you got a small account, or even if you're in a paper trade account or whatever it is, and you're trying to simulate, quote unquote, what the real market would be in terms of spread, in terms of position, and in your risk management, Singaporean dollar, Swiss franc, not a bad market to look at, to study, to craft. And, honestly, even if you make some mistakes along the way, if you're in a smaller live account, it won't kill you. And if you're in a paper trade account, the only thing you could do is grow and learn from it. All right. So That's gonna do it as we approach 35 minutes. Good lord, on this video. But I appreciate you guys for hanging out. Thanks for listening to me ramble a little bit, and I'll see you in the next video. So thank you.